Is my screen okay?
Yeah, yeah, it's perfect. We can see it now.
Okay, great. So, guys, as I was saying, so today we are going to discuss on uh, a major topic that has not been much discussed, but is of utmost importance in our everyday life, and that's how we spend and how we invest. And the later one, that how we invest, is something that we often don't discuss much, or it goes underprivileged, or it goes just beneath our all discussions that happens among us. But it is a critical part of our life, as important as our health. It's as important as, to be financially healthy is that important as being physically healthy. So diving in, today's session is just going to be like a complete journey from where you're spending, to understand how you spend, and to understand how you can save and how you invest, and the different phases involved in this. And most of us that we know, or most of the companies, there's a study that happened a couple of years back stating that most of the companies fail because of one main reason, and that is financial mismanagement. Okay, and if you look around us, most of the people that you meet or you see around us have some or the other sort of financial difficulty that they're going through, which is a result of financial mismanagement. So this clearly states how important it is for us to be financially literate, and how important it is for us to be financially healthy. And we need to know the steps on how to reach that. That's the main objective of this session. And talking about financial literacy, we are coming from a country where, we boast about our literacy rate. We are at 74% of literacy rate. But to be specific on how literate the nation is, we're just 24%. And that's actually quite a bad figure, because just 24% of the country is financially literate. That means just 24% of the country knows how to manage their money, and the remaining are, they are in the circle, or in the doom debt circle, where they just, either they're having from check to check life, or they're having multiple debts that they're not able to pay off, and that circle just keeps increasing and increasing day by day. So it's these two categories of people that we see, financially literate and financially illiterate. So the number of people that are financially illiterate in our nation is very high. And financial illiteracy is not, because it's not like something like literacy, where you know how to read and write, that's fine, you are literate. But even if you're a graduate, you could be financially illiterate if you don't know how to manage your money, and if you don't know how to manage your savings, and to have real goals in your life. So to boast, one of the state with the highest financial literacy is Gujarat, because they have the highest participation of, among the people. They have the highest participation in the stock markets, as well as in the money markets, or all the kind of markets. They participate a lot, rather compared to the other states. In where I come from is Kerala, and if you look at the financial literacy of my state, it's just 36%. That's quite a low number too. But if you look at Gujarat, that's a shocking 83%, looking at the financial literacy. So, as a whole, in general, we can categorize people into four basic categories. This is inspired by this book called Rich Dad Poor Dad by Robert Kiyosaki, where he explains the cycle. The four major categories, or the four general categories, where we can put people in. And these four categories are divided as, you can either be an employee, where you have where you have to work for an active income. You have to work, and your income is dependent on the amount of work that you put in. And the second category of people are the ones who are self-employed, like doctors or lawyers, those kind of people, where they still have to put in the number of hours to make the kind of living for, or to make the kind of money they want to make. And the next one is the business owners, where they don't they don't have to they don't have to have an active participation, but their employees have to have an active participation to generate the revenue that can be enjoyed by the business owner. So whereas when you look at an investor, which the whole session of today, that's what we're discussing on. When you look at an investor is a kind of people that does not, their income does not depend on their active participation or their active work. And though the other three category of people, they have to have their active participation or their employees participation to generate wealth, where an investor does not have to have that. You can actually invest in a certain amount of money into a certain company, and you can just sit idle and watch the company grow, and you can generate a revenue out of it or create wealth by it. So when you look at that, the broader category of people, how we just said, mainly every single person is working towards earning money. So that is the most vital part of the whole chain, or which is generating money, or what do you say, an asset to to have to buy or buy goods or services. So money is a very essential factor. And money, how can we classify money? There's a classic example how we can classify money into. So we can consider any asset that is widely used method of payment, or any asset that can easily be converted into a widely used method with little or no loss of value. That's like, in the olden days, it was a barter system, and then came currencies, and then came metals that were used as money, and then now we have the currency notes, or the monetary system, where we trade for goods and services. So apart from money, I'm seeing this. Somebody is trying to rub it off with the red thing. Yeah. Okay. So why are we working for money, or why are we in the business of creating revenue or creating wealth, or why are we an investor? The main objective of an investor is to create money. Okay, and the money that we create, if you're an actively working an employee, or you're self-employed, or you're a student, the kind of revenue that you generate, you have to keep it aside for savings. And savings is something that is very important in our life. And something that is more important than savings is investment. And we are going to cover those topics later in the session. But here, when we look at money that we generate, we need to save it. Why do we need to save it? Because we need to have certain financial goals that can kick off only when we start to save. So to understand a whole structure on how the whole journey from being starting to earn till your retirement is classified into four stages. That is growth, where that's the beginning of your career, where you're just in your early 20s, or you're in your early 20s, and you're just energetic, full of energy, and you have all those great ideas to change the world and all those kind of things. And you are like passionate, you have your passion, and but you're not getting the proper resources, or you're not earning much, but you're really passionate about your career and things like that, and but your revenue is not much. So that's your growth phase, and that almost adds up to almost like 4 to 5 years for an average Indian. And then goes to your accumulation phase, where you start getting a better paying job, where your income is getting better, where you can set aside a certain amount of money as savings. And that's the phase where you have to actually, if you're looking at from the investing side of it, that's the phase where we call as the guy investor has to be actively investing, or taking high risk in the market, because they're earning good amount of money, and because they're actively involving, they're trading their active hours for generating wealth or creating money, which can be invested for their later phases of life. Then once their accumulation phase finishes, like towards the end of their retirement, people just don't take much risk. You are more into your retirement planning. And retirement is seriously a topic that most of the youngsters today just doesn't discuss about, because it is something very crucial and very important to discuss about retirement. And the main reason for that is because your standard of living, or the living, yeah, your standard of living decreases during the retirement. And most of us often tend to oversee this issue, because once your standard of living decreases, you become more dependable on other sources, or your kids or your grandchildren's, and those affect your those affect your emotional well-being, things like that. But then all that is a result of poor financial planning. All those are results of, like, in your accumulation phase, where you can trade off your hours for money, but you didn't invest properly, or you didn't participate in the market, you didn't save, and you didn't invest. These are your mistakes. And if that happens, and you don't get enough corpus, or you don't get a fund to cater to your retirement needs, obviously your retirement, yes, your kind of state of living for your retirement is going to decrease, your standard of living is going to decrease. And that's causing a lot of trouble in today's society. If you look around, that's one of the main reason, why the elder generation are too dependent on the younger ones, and the younger ones feel so burdened off because of all that. So it is these three four stages that on this financial phase is so critical, that we have to know when we have to invest at these phases. And why do we invest at these phases? Because we need to have financial goals, and each of these phases, all or in every financial goal that you have is carried out by each phases of your financial life. And you have your educational goals, you have goals like, buying a house, you have goals like, keeping aside some money for emergency purposes, you have goals for your retirement that I just discussed about, and you have these goals that you set aside, and you need your financial goals should cater for all these things. And how do we set a financial goal? Financial goals are often set, your financial goal should be specific. And okay, could you please stop drawing in this? It kind of distracts. So financial goals is, there's a common way of setting a proper financial goal, and you call this a smart way of setting a financial goal. A financial goal should be specific. A financial goal should be measurable, achievable, realistic, and timely. So specific in the sense, like, you need to know what exactly you need to achieve with that goal. So it can be a car, it can be a house, and it should be measurable. Means it should have a monetary value, and it should have, like, for example, you're buying a car worth 10 lakh rupees. Okay, that's the value, you're measuring it, and that's the 10 lakh rupees is the measurable value to it. And then it should be achievable. So if you are buying a car worth of 10 lakh rupees with if you're having a salary of 50,000 a month, so that is something achievable. So with a 50,000 salary, you're keeping a goal of financial goal of buying a Ferrari worth of, let's say, around 5 crores, like in 2 years time. That is an unrealistic goal, and that is not achievable goal. So your goals have to be achievable, your goals have to be realistic, and your goals have to be timely, because you have to pump in money to your goals on a timely interval. That's the major part of setting a financial goal, because a financial goal requires money that needs to be pumped in at each stage, so that it can compound, or it can grow or accumulate to or equivalent to the financial need that you have, or the financial goal that you're setting. And important to that, to adding on to that, is the financial discipline, because I just said that financial goal requires you to constantly add more funds into the goal, into the instrument that is being set aside for the particular goal. So it requires a certain set of financial discipline, and that sources the financial goal. That's like the mainstream. So financial discipline is very important to that. And once we cover the financial phase, we know what is savings, we know how to save our money, and then now we are coming into investment. And how do we attain these financial goals is through investing the amount of money that we saved. Or how we can, we just talked about, like, you have to keep on pumping money into the into your financial goal. These kind of things can be sorted out when you know what is investment is. And so investment is not equal to saving, because in saving you're keeping aside money or cash equivalents. You're keeping aside money, and that money is just going to sit idle, and that's the, it's not even going to beat inflation on the longer run. And so investment is something, you're committing your money, you're committing your time, you're committing your energy, and you're putting aside all these to attain a financial goal. And that is what is investing is. And once you know what is investing is, now to attain each financial goal you have to have these investment horizons. You can't have an objective of buying a bike, or buying and then buying a house at the same time, because these two goals have two different monetary values, which takes time to accumulate or to create wealth, which takes time. So you need to have your time horizons, where how you're going to invest. So you, for your short-term financial goals, you need to have your short-term investment horizons, and your mid-term investment horizons, and your long-term investment horizons. These are horizons, to calculate, how much time you need to put in to generate the kind of wealth that you need for achieving those financial goals. And some of the main reasons why people don't invest in the markets, or that we have, like, from the number of people that we have interacted with, and the number of colleges that we have taught. And so mostly the kind of people that, people don't want to invest in the market, because the most common thing that we hear is they don't have enough money to invest. Some people say they don't have enough time, they don't trust the stock market, they don't know how to invest is another common thing, and they're afraid to lose money, or they don't want to invest. So there are various reasons, people say, that people have for not investing into the markets. And by end of the session, I would want each and every one of you to live this session with the impression that investing into the markets is something vital for every one of us. It is something crucial for all of us. And this is like a roadmap that we have created. Okay, that's like a flow chart. So it's like, if there is any leftover money after paying all of your expenses, you have to what? You have to save it. If you have all those money after paying all your expenses, and then the first thing that you have to look at it is your family's, if your family is protected. Does your family have enough insurance, or enough health cover, health insurance or family insurance, things like the insurance, to cover your family, to make sure that your family is protected. So once you have enough money to protect your family's insurance and all those kind of things, if you have excess of money, then the next question is, do you have enough money, enough savings to invest, to make an investment? So if the answer says no, you have to keep saving again. And if the answer says yes, then comes your goals. So what is your goal? So how do you want to invest it? Do you want to invest it for a short term? Do you want to invest it for a mid term or a long term? So how do you invest it? And then comes your financial phases that we just discussed earlier. That, if you are in your accumulation phase, that's like, you're less than, you're in your 25 to 35 years old time. You are earning more, and you are an aggressive investor. You can invest more into the markets, and by doing that you can create much more wealth. So what's your goal for your short term financial goal, your long term? So you have to allocate capital to each of these financial goals to achieve those financial goals. Now we are coming, so now we know what is savings, and now we know how to invest, like what's the importance of investing. Now we are coming, where do we invest? So Dalal Street, or the Indian securities market. Dalal Street is like the most famous, it's like a synonym for the Indian stock market. So that's like where the whole Bombay Stock Exchange and all the major financial institutions are there. And it's like the backbone, and the financial market, it's like the backbone of our economy. And the major activities in the Dalal Street is facilitated by the banks, the financial institutions, the brokers, the custodians, the depository participants. These guys are the main players in the Dalal Street. And Dalal Street is nothing but I mean, it's like the overname for a financial market of India. So the financial market of India is it's divided into two major sectors. One is the money market, and one is the securities market. So in the money market, we're just going to just have a short glimpse at money market because we are just going to discuss more on securities market. So money market is where short-term instruments are bought and sold. Short-term instruments by from the RBI, from banks, from financial institutions. These are bought and sold in money markets. And money market instruments are normally less than a year. I mean, the tenure for money markets, it's less than a year. So it's short-term instruments that is bought and sold, and normally the duration or the tenure is less than a year's time. And yeah, coming on to securities market. Securities market, it's a structured way of, it's like a structured way of moving investments from the household to this industry. So it is where, yeah, it is where institutions raise money from the household. And how that happens is, uh, one second, there's a glimpse in my, am I audible? Arun, am I audible? Yes, I'm audible. Okay. Okay. So yeah, so securities market. So securities market is where it's a structured area where it's a structured cash flow system. It is where money from the household is transferred to where money can be used to generate more money or generate more wealth. So the whole idea of securities market is where businesses and organizations can raise money from households or general public, and they can do their business, and the households or the general public in return get securities in return. So how it works is, like, this shows you a pattern of how it works. If a business wants to raise a certain amount of money, so they issue securities against that amount of money, and that securities is bought by general public, and it is these securities are regulated, and these securities gets listed on the stock exchange, and that ensures liquidity means, the availability to buy and sell the particular stock at any time, stock or asset at any time. Okay, and the company, in return, what the company does is the company posts their annual returns, their accounts, their audit return, their audit statements. The company will post everything related to their financials for the public, so that the public who are invested into the company can actually view the performance. So this whole system, is so transparent, and it's regulated, and this is actually the backbone of securities market. So this is a completely regulated system of cash flow that happens in the Indian economy. And this the major indexes that that you can see is the Sensex and the Nifty. These two are, very important for our Indian economy, because the higher the Nifty or the Sensex shows, the better the economy. I mean, in general, that's how it is considered, because Nifty is the top 30 companies and the performance of the top 30 companies and the market shares. And Sensex is the top 30 companies and Nifty is the top 50 companies. Top 50 companies, market shares, and everything is included. And value is derived, and that's Nifty, and that's the other one is Sensex. And these values normally indicate the positiveness or the negativeness that is seen in the market. And so this is the base of what a securities market is. So you understood, like, companies here comes companies generate companies that wants to generate or generate cash from the market. They issue securities against those cash that they're going to generate from the market, and these securities are bought by the public, and in return, the public pays the cash for that securities. And the whole transaction is completely transparent, and the securities do get listed in the stock exchange, and from there on, the trading happens, buying and selling happens. So most of the time, people call stock market being a gamble. So this is like a structured illustration to a table for you to understand that stock market is not gamble. So stock market, it's, the intention for stock market is to generate gains, and the intention for gambling is just fun or entertainment, because you don't gamble for a living, and if you're doing that, then that's a bad thing to do. And but the intention for being in the stock market is to constantly generate revenue or constantly generate wealth. And by doing that, you have various informations available to you for your investment decisions in the stock market. You have just said that you can get companies' informations, whatever you're investing into. You have a lot of information. You have access to a lot of information, and to validate your investments. And but in gambling, you don't have any of those informations, and your risk of in gambling is much higher, because you're just basically depending on luck in gambling. And in investing or in the stock market, your risk can be calculated. You can calculate your risk. Your risk to reward ratio can be calculated. And and that can be, you can be better at you can master risk management by having more time and more energy dedicated into the stock market. And stock market is controlled and regulated completely by SEBI. It's not a place where you can come and do whatever you want to do. It's a place, it's much more regulated. It's so regulated that SEBI has a very tight control over the brokers, or all the market participants, to safeguard the retail investors. But gambling it's not a regulated place. It's completely odd, and it's totally unregulated. And coming into the stock market, you have primarily two main markets. One is called the primary market, and one is called the secondary market. And the primary market, so now for any company to raise money, or any company to raise money from the general public, they come under the primary market. So companies, organizations, governments, what they do is, government companies, what they do is, if they want to raise money from the public, they issue new securities to the public. So they issue securities directly to the public, and publics get to subscribe them. The public get to buy them. And this happens where the company is generating directly money from the public, and this happens in the primary market. And these includes, the issues are done by central and state governments, do the issues, public sector companies, banks, NBFCs, public companies, big organizations. And the major participants in these issues are the retail investors, the domestic institutional investors. Those are the companies that invest into these issues. And HUFs. HUF stands for Hindu Undivided Families. And NRIs are the non-resident Indians that's abroad. And FPIs are the foreign portfolio investors, or the foreign companies that invest into the Indian stock market. So these companies or these individuals, what they do is, whoever invests directly to the company or the fresh securities or the new issued securities directly comes under the primary market. So whatever money is generated or whatever fund is generated in the primary market belongs to the company. The company gets the whole chunk of it. So for any company to generate money from the public, they have to issue new securities, and those securities are issued in the primary market. And these are done by companies, public companies, and private companies, and governments, banks, and NBFCs carry on these procedures on time. And the first time a company issues public issue is called as a IPO, that stands for initial public offering. That's when the company asks for money for the first time. They take money from the public. Is through the whole process is called as IPO or initial public offering. Then comes the secondary markets. So secondary markets is where these stocks or these assets that is bought in the primary market. Now if I'm a buyer in the primary market and I bought certain X company's stock in the primary market, now I want to sell it. Now where do I come and sell it? The place where I sell it is called the secondary market. Secondary market is where these stocks gets traded in. So once the company issues new stocks, these stocks are bought by general investors and institutional investors, companies, other companies, NRIs, and these participants buy these stocks, and now they want to sell it and they want to trade these stocks. And that trade happens, that buying and the selling happens in the secondary market. And now the secondary market, it's where the economic indicator, the one that I just said, the Nifty and the Sensex is. Nifty is for the National Stock Exchange and Sensex for the Bombay Stock Exchange, and you must have heard it a lot of times in the news and all the stuffs. Okay, so that those companies that got listed in the primary market through an IPO, that is an initial public offering, comes into the secondary market where their shares can be traded and bought and sold in the market. And these secondary markets are regulated, and these secondary markets are highly regulated by SEBI, and the market participants of the secondary markets are the brokers, the sub-brokers, the clearing corporations, the depository participants, and the retail investors and institutional investors. So these are so on to know how the market moves, or to give you a vague example, this is the price of MRF tires on January 10th, 2000. Sorry, on 1st January 2010, the price was 5,802, and the price on 19 June 2021 is 82,644. That's the kind of growth. That's 1,324% in 11 years time. That's the kind of growth that you get in the financial market. I mean, in securities market or the stock market as specific to be. So that's one. And then comes the debt market. So now you saw the securities market, and now comes the debt market. So the debt market is where companies are in the securities in the securities market or the stock market. You saw companies giving shares as securities, and they're taking funds. Now in the debt market, here companies or government institutions and government organizations, they are borrowing money from the public, and they are giving a fixed interest rate for these amounts that they're borrowing. That is what's happening in the debt market. And normally the instruments are called as debentures, treasury bills, bonds, and preference shares. Normally companies issues preference shares or debentures to borrow money from the market for a certain amount of time, and they give a periodic interest. And once the interest is paid off and once the tenor is done, the companies normally give back the amount, or the investor has even options. Some instruments even has options like they are partially convertible or fully convertible into equity shares. So in the equity market, it's completely shares of the companies that is bought and sold in the market. In the debt market, it is more debt instruments that is bought and sold, where companies raise funds via using debt instruments like debentures, treasury bills, bonds, and preference shares. Now goes, so we studied how to save, how to invest, the importance of investing, and how the stock market works, what's the primary market look like, how does the primary market work, what the secondary market is, and the debt market, how the debt market works. And so basically, as an investor, you need something called as a portfolio. Portfolio means, like, when you're investing into something, it's wiser to invest or diversify your investment, so that there's an example, like, by Warren Buffett, that goes like, don't put your eggs in all your eggs in one basket, because if it falls, everything is going to break. So the moral of the thing is that in your investment thing, your investment have to be more diverse, and the more diverse it is, the better it is. And that can sustain different market conditions, because some investments or some asset classes perform better in different market conditions. Not all assets perform all the same in all the same conditions. So in diversification is very important in making investments. So you need to have equity investments, you need to have, you need to buy into shares of the companies, you need to buy into debt instruments, so that you get periodic returns, and you get periodic returns on as interest. You need to invest into gold. The best part of gold is gold has the capacity to beat inflation, and gold works well. Gold gives better returns when the market conditions are bad. So you need to have these number of investment into your basket, to make sure that you have a good strong portfolio. And moving to the end of the session, these days, during the COVID thing, during the pandemic, this, it's been a lot of people coming into the markets. You've been hearing people getting into the markets. Everywhere it's the buzz of stock trading, or everyone is talking about trading, and everyone is trying to be a trader. Everyone is getting into the market. Everyone is searching for YouTube videos, and so trading is like the new in thing in the market, and new in thing among the younger generation of the people. And so, Pro Investor Program is a program that is bought by Eximusmpro. That's two companies jointly. We are bringing together a new program into the market, and so we are going to discuss a bit on this program right now. So the journey from spending to investing was how you start off your early stage, and how you learn how to save, and how you learn how to invest, and where do you invest, different areas that you can invest. And then now you're learning on, you this is a mentorship program that Eximus and Empro. So we're just going to say, what is Empro? Empro is Mavericks Pro Academy. So Mavericks Pro is a financial research company and a trading company. So we are basically into equity investments, and commodity and currency trading, and research, and things like that. And so we have partnered up with Eximusmpro. So we have partnered up with Eximusmpro, and together we have bought on this course called the Pro Investor program. And this is a completely different thing that you're going to get from what you see around in the YouTube or things like that. Because here you're taught by real traders. We are all real traders over here, and the course is divided, or segregated into 20% of theory classes, where you learn and understand the stock market, you learn about the histories of the market, you learn how each asset classes work, and things like that. And 80% of the class session is more into practical, where you actually have hands-on experience in the market. So, and you will learn about the fundamental analysis, technical analysis, ratio analysis, valuations, charting tools. You learn about the PE ratios. How do you invest on a company fundamentally by studying fundamental tools? How do you invest into a company, and how do you invest into the company by using technical tools? You study all of that, but you study. The difference is, you hear it's not much of a lecture sessions. Here it is more of practical sessions, and you're guided, and you're taken care by mentors who are live traders in the market, who are handling funds or who are handling live accounts and who are doing daily trades. These guys are the ones who are going to handle you, and these guys are the ones who are going to be supporting you throughout this journey of 3 months time. So during this 3 months, you're going to learn about the basics of financial markets. You're going to learn about equity investing. You're going to learn about commodity investing. You're going to learn about options, derivatives, and all of this stuff. Plus, you're going to be under a mentor who's going to guide you through, who's going to, that's one of the biggest thing that a trader needs is guidance, because trading is more it's a very simple stuff to do trading, but it's more of a psychology thing that you need to have a mentor who can guide you through the process. That's the most important thing. And having to have a mentor who is a real life trader and who is actively managing an account in Mavericks Pro. And Mavericks Pro is a company that is solely into research and investing and all these things. So we are professional traders, and now we are coming out with Eximusmpro, and we're trying to bring out this mentorship program where we actually want to train younger generations and the people like you to be traders, to learn a new skill as a trader. By being a trader, you are learning a new skill that you can use it as your full-time source of revenue or your part-time source of revenue. And it's a different thing to be under a mentorship with us, because here you are going to see and you're going to incur into the live market conditions, what is happening, the live news is what is happening, how does it impact the markets. Those kind of things is what you're going to be learned, and the whole thing is going to be for 3 months time. And in 3 months time, you will be from a beginner trader to a professional trader, or how an institutional trader thinks and how an institutional trader acts. So here it's not much of lecture classes. Here is not much of things for you to remember and memorize and stuff like that. Here it's more of practical. Here it's more of how you can make money. So here we're teaching you, or what we're doing is teaching you how to make money in the real markets. And that's what is more important than all the lecture classes. And I could give you hours and hours and hours of lecture lessons, but what's the whole point if I don't know how to teach you to make money. So the whole important point is how the whole money making thing works, or how the whole investing, trading happens in the real life. And it's much more intense and it's much more sophisticated when it comes to institutionals and how institution thinks and reacts than how retail investors work. So here is an opportunity for you to understand and know and study how the institutions work and perform. And yeah, that's it about the session today. And what career path you can get from this? Once you finish this course, it's a learning come internship program. You complete an internship along with that, and that internship is enough for you to showcase your skill as a financial trader for any company that you're going. And then on top of that, your 3 months course, the mentorship program, is enough for you to attend various NIs and certifications that will help you in your job hunting or in your career placement things, if you want to be in the financial industry. But overall, hey, it's much more than that. It's about creating it's about studying a new skill that can help you make money. It's about learning about an industry. It's about being part of the Indian economy. That's very interesting to be at the heart rate, and the pulsing, and it's all loud and noisy and everything. And it's nice to be being part of such a big industry. It's worth around 6,000 crores transactions happen on a daily basis, and that's big. And let's just say, this is an opportunity that you guys have to be part of a live trading floor. And so Mavericks Pro has the live trading floor, and the sessions are taken from there. And so you always have updated things on the markets. You are always updated with the markets. And yeah, uh, that's it on the course side. And so these are sessions more than lecture classes. It's more of practical sessions teaching you how each financial fundamental and technical tools work, and how you can create and generate wealth out of using all that. And we teach even yeah, I forgot to say, we have this strategy that we have developed called the Beardman strategy, that took years for me to develop and back test it, and and we're running it successfully from many years. And these strategies will be taught to all of you guys, along with the course. And the strategy that we use to trade in the markets daily will be taught out to all the students who will be learning from Eximusmpro. And that's the major takeaway from the course. Yeah, now we can take questions. If you have questions, you can ask me. And so if you have any questions, tell us something about intraday trading. Yes, intraday trading will be taught along with the module. You'll be learn how you'll be taught how to do intraday trading, options, derivatives, commodities, everything. All those stuff will be taught for you, and how you can your chartings for all those stuff, and the tools that you need to use. Beardman strategy actually, works well with intraday trading strategies and breakout strategies and price actions. All these stuff will be taught to you alongside of these courses. But it's more than teaching. It's more of a practical thing that guiding you through the process of identifying breakouts, identifying patterns, and you know, cutting out the noise from the market. Sir, if you want to invest our money, then how? Definitely, you'll be taught how to invest your money. You'll be having a live account. All of you will be having a live account where you'll be taught how to trade. First, initially, you'll be taught what is paper trading, and you'll be taught after that. You'll be taught how to trade with your own money, and you can use your own money to trade it, and you'll be taught all of that. Any more questions?
Like David, can you hear me now?
Yes.
Yeah, fine. So I
Sir,
got a
how
query from
to
Ikra. Ikra is like basically the course fee will be 15,000. It will be inclusive of GST. And as David mentioned, it will be a 3 month program, and you will get a deep knowledge about practical world of investment. And apart from the theory stuff, so we are mainly focusing you guys to become a professional trader. So that's what we are. We want you guys to become a pro investor. So that's what the aim of the course is. So it's literally, as David mentioned just a few minutes ago, we will be giving some kind of dummy shares or demo shares. With that will help you to understand how to trade and how to build your portfolio and all strategies. Even if it is a intra trading stuff, we have our own patented investment strategy. So we are helping you to learn the stuff. So I think the overall the course period will be for 3 months, and the fee will be 15,000. Is inclusive of GST. That's it.
And Kiran is asking how, if you want to invest your money. Yes, Kiran, I replied to that. How to open a demat account? Yes, Kiran, you will be taught how to open a demat account. You will be taught how to use a demat account, how to use charting platforms like Trading Views, how to use a chart, how to plot your charts, how to draw lines, trend lines, all those stuff. Everything that a trader needs to learn to trade in the market, you will be taught, Kiran. So you don't have to worry about anything. You're in safe hands. You're with traders or trading live markets on big funds on a daily basis. That's what we do. We are not. I'm not a teacher. I'm a trader. I've been trading in the markets for 10 years now, and it's so you're with good hands. You're with traders and people who are in the market and people who trade for others. So we trade for hundreds of people, and we have we have a big research team so helping us with that. And so yeah, any more questions?
And adding on to it, David, as we mentioned, even in the course, like once you register in the course itself, what are the required details, so which is required, all the documents which is required for the demat account will be collected from the part from Eximusmpro, and we'll make sure that you will get a demat account get opened from our side. So literally everything regards to the demat account will be taken care of from our side. So you don't need to worry about that factors.
Exactly. Thank you. So everyone, so once you register with us, automatically your demat accounts get open under us. So we have our own brokerage. We are a sub broker. So we'll be open under us. So don't worry on that. If you have any more questions on the course or I mean the mentorship program, please do ask now. So I guess uh, Arun, we can.
Yeah, so that's it, guys. I think that was a really wonderful section from David's side. Like, thanks a lot, David,
Thank you.
for
Thank you.
sparing that much time for our students. And literally, I feel like now we got the new insight to how you can go forward and start investing and can literally join with us. The course will be starting from the second week of August. That's what we are planning to do. And especially the weekends, we will be having weekend classes. So even if you are a student or a working professional, that really don't matter. Okay, so we'll help you to learn the stuff, especially in the weekends, and it will be a 1 and 1.5 hour section. And basically on Monday to Friday, we'll be giving some demo shares. With that, we'll have a mentor making program. So throughout the weekdays, that is from Monday to Friday, you know that that's where the market is open. So we'll be using that opportunity to make you understand how the market performs, especially on the weekdays. Okay, and mainly when this comes to weekend, we'll be having the lecture lessons. Meantime, on weekdays, we'll make sure that still you will get engaged with some certain kind of homeworks or research that you have to do from your own side. So basically, that really helps you to understand how really the market performs rather than blindly going to invest in some shares without by getting some knowledge through some YouTube videos or from your friends. We have seen that many of them have falling for a pitfall of simply they consider the market itself as a gambling, but it's not like that. Perfectly, we'll focus on changing that psychology here, and I hope really get a good idea about how to invest and the importance of investment, everything from this section. And thanks a lot of guys, and especially if you are interested to join the program, and you can just log into our website that is www.eximusplanningmedia.com.